Now, I wouldn't recommend doing this because all of a sudden now you've invested 30% in your net worth in crypto in some random gambling coins. Wouldn't recommend that. So how does match betting actually make money? Bit of a different topic, but what I'm about to explain here in 4 words is going to completely change the way you perceive a financial opportunity for the rest of your life. Once you see this concept, you can't unsee it. And I guarantee you, it'll be stuck in your head forever. And that's a good thing, because if you can apply this concept to everything else outside of match betting, I can guarantee you will become a better investor and more savvy with your finances. You may not have expected to hear this in a match betting course, but essentially this concept is the exact concept that can be applied outside of anything to do with money, and even in just general, in terms of risk taking and thinking. We'll get more into thinking later in this module, but essentially how match betting makes money can be explained in 4 words. And those 4 words are low downside, high upside. And you can even change this to lower downside, higher upside if you want to be technical. Now, what does that mean? Let's break it down. Downside. What does downside mean? Downside is essentially what can go wrong, the risk. So if, as a gambler, you put a bet on a horse and you put $10 on it, the downside is you lose $10. The upside is the exact opposite of that. What is the maximum thing that can happen with that bet? Obviously, if you put a bet on at $10 at $10 odds, you can make $100. With $10 outlay, you've profited $90. The upside's 90, the downside's 10. There's no middle ground. In that example, it's either lose 10 or make 90. I'm going to show you an example in a second where Steve runs us through a hypothetical where essentially he's made up a game where there's 2 characters in the game in a coin toss where there's a 50-50 outcome. Obviously, heads, tails, 50-50 chance one of these can happen. One of the individuals has a higher upside than the other, and one of them has a higher downside than the other. And that game, across a number of iterations, a number of coin flips, actually proves how this concept works. And essentially what this concept is a mathematical edge. When you have a lower downside and a higher upside, you have a mathematical edge. The edge is built in. Now with the bookies, they've given you this edge through their bonuses. They've given you this edge through their promotions, their specials, their offers, right? They've factored in that if they give out these promotions to the masses, the majority of people are going to grab the dangling carrot, which is the promotion, and then they're going to then lose their money long term. All right, that is their downside. Their downside is to pay money, to lose a little bit of money here with marketing and giving away money to the minute amount of people who are doing this and taking it, like you guys, match betting, knowing that the gamblers, the mugs who keep this whole industry in business are going to take that dangling carrot and then go and spend their money, which is essentially the bookie's upside. So they've spent a little bit of money, given away a little bit, and then they're gonna get that all back with the high upside. But as a match bettor, we have the odds in our favor because bookies have given you an opportunity to take the upside while reducing the downside to keep it lower than the upside. All right, this next video is going to show this in a very simple example. And this concept here can be applied to every single method that we do in the Platinum Squad and as a match bettor. Have a watch.
A bunch of Gibbs over here. We've got the edge in our favour. We can't lose. We've got 2 people betting against each other. We got Craig and we got Gib. Now here are the rules of the game. It's very simple. Every time I flip this coin, if heads comes up, Craig wins $10 and Gib loses $10. If tails comes up, Gib wins $20 and Craig loses $20. Okay? Very simple, very straightforward. Let's see how this plays out, all right? Here we go. First one, we'll do it that way. Heads. Heads is straight up. So, Craig makes $10 and Gib loses $10. Pardon for the handwriting. Next one, let's go again. Here we go. Heads or tails? Bang. We got tails this time. So, this time Gib wins $20 and Craig loses $20. Let's go again. Heads or tails? Bang, bang. Heads it is. Craig wins another $10. Gib loses another $10. Let's go again. Let's go again. Heads or tails? Bang. Tails. Plus 20 for Gib and minus 20 for Craig. We'll leave it there. You get the idea. All right, so let's tally it up. Let's see where we're at. Let's go with Craig. Plus 10, minus 20. So we're sitting at minus 10. Even. Plus 10, plus 20. Even. Minus 20. Minus 10, minus 30. He ends up at minus 30. Craig ends up at minus 30. I bet you can guess what Gib ends up. I'm not even going to count it. I already know he's going to end up plus 30. That's edge. Gib has the edge in his favor. When he bets $10, but he wins, or he profits $20 when he wins, but he only loses $10 when he loses. So therefore, the edge is in his favor because it's a 50-50 game. So he ends up plus 30. Craig, on the other hand, the edge is not in his favor. He loses $20 when he loses, and he only wins $10 when he wins. And it's a 50-50 game. So, of course, he ends up minus 30. That is edge right there. That is why, in the long term, it is literally impossible if the edge is in your favor. All you need to do is follow for a long enough period of time to ensure that the edge has a chance to come to the surface. What do I mean by that? Well, see right here, Craig was actually winning. At this point in the game, Craig was minus 10. He was actually up plus 20. After 5 iterations, Craig was winning. He was actually up $20, even though the edge wasn't in his favor. He had some positive variance his way, so he was up $20. However, the more we played the game, the more we followed, the more we let probability do its thing, the variance caught up with him, the negative edge not in his favor caught up with him, and he ended up negative $30. We got the edge in our favor, we can't lose. Over time, we literally cannot lose. Yes, we're going to have periods where we go negative, 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 negative. We're going to have those periods, just like Gib did. But at the end of the day, Gib's sitting there going, I know it's going to turn around. I know I'm going to come out on top, so I'm going to keep playing the game. That's what we do here. It's simple as that.
So that example there shows you what happens when you apply a mathematical edge over the long term with consistent staking. In that example, the coin flip, both of them were betting the exact same amount of money every time. So low downside, high upside investing won't actually work long term over a number of iterations unless you keep a consistent staking. If you're betting with random amounts, e.g. one time you decide to bet 10, then another time you decide to bet 500, you might lose. Let's just say you have $1,000 to invest, right? And let's just say randomly you decided to put $200 on 4 bets in a row and they all lose. Even though you've got that mathematical edge, you've just lost 4 bets in a row, which means that you've now lost 80% of your bankroll. You've now lost $800, 4 by 200, $800, gone. You now got $200 bankroll left. Whereas if you kept that consistent staking, and in this example, let's just pretend Gib had $1,000 to start with, it's actually impossible for Gib to get to zero in the long term. Why is that? Well, when his upside is higher than his downside, if he was to start at $1,000 and he's going to bet $10 every time, he would have to lose 100 units of his bankroll to lose everything, which is literally mathematically impossible in a 50-50 outcome. Now, with match betting, that's a little bit of a complicated example. If you didn't understand that, rewind and watch it again. But essentially, if you gave Gib $1,000, which is 100 units, assuming he's betting $10 every single time, he would have to lose 100 units to get to zero. And that's mathematically impossible when every time he loses, he only loses 10, but every time he wins, makes 20. So in that case, he's actually got a double upside compared to his downside. So if you consistently stake the same thing over and over again, his graph will just keep going up. And Craig's graph is the opposite, it'll keep going down. That is an example of an investor who's investing with a lower downside compared to his upside, and he's applied consistent staking over time. That's 2 of the things that you need to be successful in investing. Sorry about the balloons. But essentially, the third factor I'm going to talk about in a second. All right, so this exact concept, the low downside, high upside, can be compared to our horse system, which has been now going for more than 3 years. At the time of filming, 30th of May 2024, we're sitting at just over 1,100 units. Now, that started on December 16, 2020. As you can see here, there's been a number of periods where there'll be short little drops in the graph, which means that there were losses, right? There were Gib losing $10, $20, $30. He's losing 1 or 2 units, 3 units, 4 units, 10 units even. But when you've got a bankroll of 100 units, it's actually impossible that you get to zero because mathematical edge comes from the promotion. So every time the horse system gets a tip, it is followed with a second and third bonus back promotion. And over time, let's just say a third of those tips place and then a third of them lose and a third of them win. I've just pulled those numbers from space. But let's just assume a third of them place. Every time a third of them place, you don't actually lose 100% of that investment. You only lose 35% of it. And as a platinum member, you would only lose 20% of it on average because you'd be turning it over at 80 because you're going to get 35% back if you're turning over at 65%. So what does that mean? Well, on every third investment, essentially the loss is minimized, i.e. the downside has been limited. So the upside remains the same, but the downside goes lower. Therefore, over time, that's why the graph looks like this, because the downside of the horse system when it invests can't actually be overcome by the higher upside because the upside is uncapped. The odds, whatever the odds are, when they win, and when they lose, every third investment doesn't lose the full amount, it only loses 35% or 20%. That is why this graph looks like this, right? Now, in the short term, if you zoomed in on periods, there would be small losses, but it'll never get to zero, as I said before, when you have consistent staking applied with a relevant bankroll. Hopefully that makes sense. I hope it does. If it doesn't, go back and watch the video. Again, all this is coming back down to is the fact that there is a lower downside compared to a higher upside. Same goes with the sports system, which is our most profitable method per dollar spent. All right, if you look at last year, 2023, sports system number 1 started in round 1 of the AFL season, went for 29 weeks, it profited $7,627. We then launched a second service which started in round 10, went for 19 weeks, made $5,062. And then if you look at one of the sports systems from this year, 13 weeks in May 30, 2024, we're looking at 2787, 13 weeks in. And the reason why these things are making money long term, it doesn't mean every single bet wins, but when they lose over time, the downside is lower than the upside. We have the same thing happening here. Moving on. So once you've understood that, you're gonna understand now, okay, I need to get myself into a position where I'm chasing low downside, high upside investments or opportunities, and I'm gonna start looking for those, great. But you also need to understand that in life, you would have seen the video before this in investing about how to profit long-term or what you need to profit in any investment. Those 3 things are money management, emotional and discipline control, and of course, edge. Now, edge can be mathematical, which is the one we're talking about when we talk about match betting. That is the edge given to you by the bookies. You don't make this edge up, it's given to you. Everyone has it unless you get banned, right? That's a mathematical edge. The edge coming from the promotion, the edge in the Gib video where Steve's made up, that is a mathematical edge. That is not guesswork, that is not doing all this analysis or anything, it's just there. You have a mathematical edge, and that's why match betting is in a world of its own. There's not really any other investments on the planet where you can get essentially free money. The only thing that I can think of is credit card points, where you get bonus credit cards and things like that, where you can get free points for signing up. That is essentially free money. But the reason why, again, those companies do that is because they know that people overspend and they make their money off interest charges. So they know that if they get every Tom, Dick and Harry on this and they get 100 people, maybe 20 of them are actually gonna then pay interest every single month because they overspend. Whereas the 10 or so credit card arbitrage, match bettors, whatever you wanna call them, they're the ones that are coming in there and they're essentially irrelevant to the credit card company. That's just a cost. That's their downside. It's lower than their upside because the upside of the people keep paying interest every month is an example of that. An analytical edge is not something that you should be encouraged to do unless you know what you're doing. Essentially what an analytical edge is if you were to create your own system, e.g. if you were to trade Forex stocks, things like that, where you actually have to prove your edge over a long period of time. And a long period of time is like years. And you'd have to go through thousands and thousands of occurrences or iterations of what you desire to prove. And obviously with variables and factors that you change, going into really uncharted territory here, this is something that you don't have to worry about. The sports system and the horse system that are currently offered do have analytical research into them, which means that they have not only a mathematical edge given to us from the promotions, but also an analytical edge, which adds value and more profit in conjunction with these more important ones, which is money management and discipline. Most people who lose long term lose because of this. They don't lose because of this, they lose because of this. What does that mean? Well, essentially, you ask any gambler, the reason why they lose is because they change their stakes long term. Sometimes they bet 10, sometimes they bet 500. When they're angry, when they're sad, when they've won more, when they've lost more, they bet more and they lose. And this comes back to this. So essentially, this is the number one factor here that is going to basically determine who wins and loses long term or who profits long term. And that's because if you can't control this, then that affects this. And no matter how much edge you have, if this doesn't stay the same, you lose. And this controls this. So the number one thing you want to nail is discipline and emotional control. And if you can do that, you're going to be a good investor for the rest of your life. Moving on, what now? Well, essentially now you're going to get yourself into positions where your downside is always less than your upside. That's it. So whenever you make a decision from this point on, whether it be match betting, whether it be life, always ask yourself, what is the downside and what is the upside? This can actually be applied to anything. This doesn't have to be to do with money. If you think about something and you think, shit, what do I get out of this? What is my upside? What is my downside? Write it on a piece of paper, think about it. And as you're going to hear more about in the rest of this module in the Platinum Score, we're actually going to teach you how to think. We're actually going to teach you how to use your emotions. We're actually going to talk about understanding how people get themselves into bad situations because they don't think. Weirdly enough, if you learn how to think, you actually become really strong at match betting and really strong at investing and really strong at your financial management. And if you apply this money management and everything that's just been spoken about in this video to other things for the rest of your life, do it for years and see what happens, because I guarantee you this shit works. And finally, don't move away from this principle in anything you invest in. Always look back. Low downside, high upside. All right, I'm going to give you some examples here, and I'm going to show you an example of not only good investing, but also poor investing. And obviously examples are really good to understand real life stuff that you can relate to. All right, so real life example, simple, gambling without an edge. Take any mug punter, Hero Multi. What's their upside? Essentially all or nothing. Their downside is maxed at their stake. There's no middle ground. They're not going to hedge unless they cash out. And essentially their upside is high, but it's also unlikely. And their downside is also high, but it's likely. So essentially their upside and their downside aren't really in a good relationship, and therefore in the long term you'd probably guarantee, in fact you would guarantee, that you would lose long term, because then other things would factor into that example as well, such as inconsistent staking and emotional and all sorts of things. But essentially going back to the main things we want to focus on in this video, upside high, but the downside's also high. So no. Not good. Now going back, a more complex real life example. We've got an individual here with $20,000 net worth, $20,000 savings. His rent is $1,500 a month, and he's earning $70,000 per year. Now his mate comes to him and he says, hey, I've got a crypto coin. This thing's going to the moon. I've got a tip from some forum I'm in, and these guys reckon it's going to 50x in the next month. So ask yourself, what happens here? The upside is actually high. It potentially could be high, right? You have to say that. Like anything that you invest in like that, there is a chance that it could 50x, right? That is the upside. So let's write that down. Now this guy, remember, has 20K savings. His rent is $1,500 a month, and he earns $70,000 a year. His net worth is essentially 20K. That is the key thing here, net worth 20K. Now the downside, what's the downside? Of course, high, because it could go to zero. Max. The downside is high. So whatever he invests here could go to zero. So the actual downside is how much he invests, because let's just say he invests $15,000 into this coin. He's now investing with 75% or 3/4 of his net worth. And if that goes to zero, his upside is high still, but his downside is now 3/4 of his net worth, because this could go to zero. Now, this example here, technically, this actually can be changed to low. And I'm going to show you how to do that. This is the real downside, right? This doesn't change, but the real downside is how much he actually invests. If he invests $1, then his downside is $1. It's not high compared to his net worth. If you lost $1, it's irrelevant, right? So how do you decrease your downside here? But you still could take that tip, really, if you wanted to. If you really wanted to, and you wanted to invest in something that potentially could go 50x, you can do it. But I would recommend only investing 1% or less of your net worth. So if you invest $200 into this coin, right, and it goes 50x, you're gonna make, what, 10K? Or you're gonna have 10K, you're gonna make 9,800. That's assuming that you actually sell it as well. But essentially what's happened here is you've reduced your downside by reducing the amount you've invested. So essentially now you have an investment where, yeah, it's a gamble, but you've now minimized your downside by reducing the amount you've actually got to spend. We'll talk about this more in investing in more of this module, but essentially that's a concept there where you can go, all right, well, yeah, it is a high downside, it is a high upside. Maybe I do want to get involved with it. It probably won't go 50x, but if it does, at least I've got a position. I'm going to invest maybe less than 1% of my net worth. I'm going to invest $200 in it. And if it loses and it goes to zero, I've lost $200, I've lost 1% of my net worth. My life's still the same. Whereas if you invested 15K, you've now lost 3/4 of your net worth. Pretty different scenario. So that's just an example, something to think about. And also his downside has now been capped at 200. He can't lose more than $200, right? He's capped it at 200. So now his downside goes to low and his upside goes to high. Now I wouldn't recommend doing this on 30 different coins, because all of a sudden now you've invested 30% in your net worth in crypto in some random fucking gambling coins. Wouldn't recommend that. But if it's 1 or 2, 1% or less, I mean, no one's going to lose their life savings investing less than 1% of their net worth in a couple of coins. That's just risk management. That is reducing your downside. That is quite simple investing principles. All right, moving on. Basically, just to reiterate, think. Before you do anything, think. Before you do any method, think. Before you place any bet, think. Is my upside higher than my downside? Think. See you at the next video. Hey there, so hopefully you enjoyed that video. Hopefully you learned something from it. Make sure you subscribe. That video was actually taken out of our Platinum Squad course. The Platinum Squad course consists of around about 20 hours worth of video content covering a vast variety of topics. Obviously, there's a lot about match betting in more so Module 2, 3, and 4 of the Platinum Squad, but Module 1's a little bit different. Probably not something that you expect to see in a match betting course. We actually focus heavily on thinking, the ability to critically think, how to think, money management, discipline, emotional control, and investing. Many people don't know how to think when it comes to financial management. This video here hopefully taught you something about it. It's vital if you want to be successful in match betting. If you want to get access to more of this content, obviously it's part of the Platinum Squad course, which over 1,100 people have now joined, 1,100 member community in our Discord. You'll get lifetime access to this content as well as the 20 hours of videos and anything else that we ever add in the future. If you want to get access to that, it's in the description, but would recommend starting with our free course first and then moving across, booking a free call and going from there. Cheers.